Hello, friends. I feel happy in welcoming you for this workshop on building effective cash flow models in Microsoft Excel and VBA for Excel. This workshop is completely case based, excepting for the conceptual part, and is of hands on that will strengthen the conceptual knowledge of the participants and equip them with advanced MS Excel techniques and basic VBA programming skills and techniques required to develop, operate, and maintain cash flow models and thereby enhance the value addition both from strategical and tactical perspectives. If you are a professional, your role as a business partner will certainly be strengthened. The workshop is divided into 9 modules for the purpose of discussion, understanding, and illustration. Effective cash flow management helps a business to reduce its cost of capital and achieve its objectives on a timely basis. This requires an entity to forecast and model its cash flows effectively. Thus, the objective of this workshop is to equip the participants with the skills and knowledge of the level that will be required to prepare, operate, and maintain customized cash flow forecasts and models for their business entity. As mentioned earlier, this workshop consists of 9 modules. The first one is on introduction and reading of the case study that will be taken up for the entire session. The second one is on creation of spreadsheet templates and building VBA controls. The third module is on identification of external macro factors and mapping the organizational macro factors with the external factors. The fourth module is on forecasting working capital determinants. The fifth one is on forecasting elements of income and expenses. Module 6 is on preparation of investment cash flows forecast models. Module 7 deals with the preparation of financial cash flows forecast models. And Module 8 is on preparation of operating cash flows forecast models. In Module 9, we are going to discuss about the consolidation of the component cash flow models and validation of the cash flow forecast models. In Module 1 on introduction, we are going to discuss about the significant cash, the impact of non-availability of cash, the challenges that might arise to a business if you are left with the surplus cash but which are not effectively deployed. We will also be taking up an important section of this workshop, namely reading of the case that will be provided for the purpose of the workshop. Having read the case, we will have to identify the input parameters, the input data, the assumptions we will be making, the input sheets we'll be creating in MS Excel, the constraints we'll have to consider, the limiting factors that form part of the functioning of the entity, the output sheets we'll be creating, and alerts and controls which we'll be considering for the purpose of effective design of the forecast model. Module 2 is one of the most important parts of this workshop. Here we design MS Excel templates in order to create the spreadsheet infrastructure and add VBA functionality. However, we will keep on refining and modifying the templates until we are complete in all respects with regard to creation and refinement of the output models. We'll be creating spreadsheet templates with reference to impact analysis on account of the economy, industry, and competition. We'll have also templates for collecting data on account of macro factors, assumptions, demand forecasting, capacity planning, targets and outcomes, alerts and controls. There will be separate sheets for input data, financial statements as at the beginning of the period, the working capital determinants and their parameters. We'll also have templates for forecasting of income statement elements. Besides having templates for the investment cash flows forecast model, financing cash flows forecast model, operating cash flows forecast model, and entity cash flows forecast. We'll also have a section for review of alerts, targets, and outcomes, and a separate sheet for the action list, which will be based on the outcomes. All along, we'll also be building in VBA functionality. This is a sample of controls we have built in a typical scenario. As you could see, we'll have the parameters in respect of which we want to have control on the leftmost column, such as the GDP growth rate, whether the justification for uh, higher industry growth vis-a-vis the economy is provided for, whether the justification for higher company growth has been provided for. On those aspects, we have created some kinds of controls here. You can also see a small chunk of VBA code, which is shaded blue at the bottom of this template. Moving further, this is a simple template that has been created in relation to the assumptions that are being made, such as the proportion of cash sales on the total sales, the proportion of cash operating expenses, and then assumptions in relation to the collection of the old trade receivables, payment of the old payables, etc. Here there is another sheet in relation to the checks we want to have. Basically, they are in the context of arithmetical check, such as whether the closing cash and cash equivalents as per the balance sheet or in agreement with the cash flow statement. So in reality, we will have n number of checks and conditions we would want to verify. A business is a subset of an industry, economy, and external environment, and hence the macro factors from those perspectives have to be studied, and the organizational macro aspects need to be mapped with them before any strategic plan is devised for the business entity. It becomes essential to review the macro indicators even on a regular basis. The macro indicators can be generally classified into economy indicators, industry indicators, competitive factors, then government policies, and geopolitical matters. In addition, we also need to identify them on the basis of controllability as well as the non controllability of the factors, besides mapping the organizational macro factors. As far as the economy is concerned, we need to capture the parameters relating to economic growth, inflation, balance of payments, and interest rate. These factors have an important bearing on the performance of the business entity, and their impact assessment has to be properly studied and incorporated in the forecast model as well. As far as the industry is concerned, the business entity is a subset of the industry of which it is a part. So, whatever factors which need to apply, which are applicable to the industry, need to be considered from the perspective of the business itself. They are basically in relation to the market segmentation, the opportunities that are available, the challenges like such as in the form of substitutes which an industry is facing, and what is the expected growth of the industry in relation to the economy. All these factors need to be considered as well. As far as the competition is concerned, we need to consider the total market size, what's our market share, who are all going to be the new entrants, what are the game plans of our competitors, and what are the other challenges which will be foreseeing in the light of the competition. All these factors need to be captured, and of course we'll have to have specific templates in order to assess their impact on our operations. Government policies and geopolitical matters play a very great role in the context of an operational part of an entity, and hence on the cash flows that an entity will be able to generate. So, factors such as the impact of government policies on account of investments by business entities, export incentives, taxation measures, and also any actions by the government on account of ESG reporting, integrated reporting, those aspects need to be considered as well. As far as the geopolitical matters, we all know that the political scenario across the globe has an impact on oil prices as well as on the availability of input resources. Hence, the impact of any prevailing political scenario has to be considered while while determining the cost of inputs such as oil and other resources. Module 4 talks about the working capital determinants. If the working capital cycle is longer, an entity needs to lock up its liquid resources for a longer time, leading to higher cost of capital or a stress on the organizational morale. Effective cash flow management requires the management of working capital effectively as well. Here we need to consider factors such as the industry average working capital cycle, which need to be compared with the organizational working capital life cycle. We need to review our own manufacturing cycle. We have to make decisions in relation to inventory levels, as well as a review of credit policies and purchasing policies occupy an important role in relation to our working capital cycle. Of course, the liquidity policy also has an important uh, determining role in relation to maintaining appropriate resources to meet contingencies. Besides, we also have to factor in the working capital structure. That is, how are we going to meet the deficit in the working capital in the form of long term loans or short term loans. So, these factors need to be considered while we are going to determine the working capital structure and the resources which you will have to make available for an effective functioning of the organization. Income statement is a very essential and integral part of the cash flow management system of a business, and forecasting of elements of individual revenue and expenses are highly critical in the context of preparation of an accurate cash flow forecasting of a business entity. This equally applies both for revenue as well as expense. This slide and the next one focus upon forecasting of the revenue and expense elements. In revenue forecasting, we need to appropriately capture the forecasting aspects of demand as well as price forecasting. In relation to expenses forecasting, we need to identify all the significant costs and expenses and the relationship existing between the expense elements and other causal factors such as the production, revenue, or discretionary costs as well. We'll also be creating appropriate links with the historic financial performance sheets. We have to create link with the pricing template sheet we have created. We also might apply certain techniques in relation to measurement of costs such as activity based costing, total costing, marginal costing. There are two important cost elements which, though do not form part of the normal operating expenses, which you have to consider. They are financing costs and the tax on profit. We also have to maintain that we always make a scenario analysis with reference to the major elements of income and expenses. Having completed the forecasting of revenue and the expense elements of the income statement, now we move on to the preparation of cash flow models of the entity. We need to understand that cash flow models consist of three important segments, namely the investment cash flow model, the operating cash flow model, and the financing cash flow model. So we need to forecast and model the elements appropriately in connection with each of these three segments of the cash flow statement. The preparation of investment cash flow model involves gathering data regarding the proposed disposal of non-current assets, the plans to expand the operating capacity, the investments which you are going to make in other entities, and disposal of the investments which are made earlier. We also consider the dividends which are received on account of investments we have made in other business entities. Simultaneously, we'll also be making a reconciliation with reference to the non-current asset accounts of the business entity. Matching of the inflows as well as outflows on account of the non-current assets will give us the net inflow or outflow on account of the non-current assets. Preparation of financial cash flow models involves study of the existing capital structure and proposed capital structure, information on capital that is being obtained, whether it is of loan or equity, how much of the capital is being redeemed or repaid, what is the interest cost that has been incurred and paid, what are the dividends that have been paid, and also we need to make arithmetic reconciliation with the non-current liabilities in the books of accounts. So, considering all this information, we get to know what is the net financing cash flows of the entity for a particular period. Preparation of operating cash flows model involves linking the worksheet with the historical performance, the economic indicators, the market research, also linking the operating cash flow model template worksheet with the investment policies and financing policies of the organization, the pricing strategies, behavioral analysis of costs. It could involve even application of statistical techniques such as regression and trend analysis. We also need to reasonably determine the financing cost that will be incurred by the business entity, besides calculating the tax liability on the profit. Besides, we also have to make a scenario analysis in relation to the key uh, profit or loss elements of the business. Once the component models have been prepared, then we'll move on to consolidation of the cash flow models. Having prepared the component cash flow models, we need to consolidate them and get the consolidated entity cash flow models, which are also requires preparation and confirmation with the balance sheet model in relation to the closing cash and cash equivalents. We'd also need to remember that the opening balance sheet has to be reconciled with the cash flow models in relation to the opening cash and cash equivalents. Having prepared the consolidated cash flow models, we need to review the cash flow models and also need to assess the surplus or deficit of cash, for which we'll have to draw an appropriate action plan in order to bridge the deficit in relation to the cash that will be needed, and also in order to effectively deploy the surplus cash that the organization might be having. If necessary, we will have to remodel the forecast, and we also need to validate the cash flow models with the strategies and goals of the organization.